Hi, today I'm hosting Rolands Mesters, the co-founder of Nordigen. You will find this podcast interesting if you know open banking very well. But even if you don't know open banking, this podcast will surely take your imagination on a joyride. In this podcast, we talk about some trends that could change the whole banking paradigm. And presumably, open banking will create a bonanza of new applications and future developments, fueling the sports cars of neo banking fleet that are swishing past the bulky trucks of conservative banking systems, trying to block the way. I'm sure you will enjoy these. All the best. Bye bye. Hello, my name is Alexander Morer, and I'm the founder of ITKeyMedia. You've tuned in to our podcast about Central and Eastern European startups that are just in pre-Series A stage. Our guest today is Rolands Mesters, the co-founder of Nordigen, the first free European open banking AI API that provides regulated connections to major European banks and much more. Hello, Roland.
Hello, Alex. Great to be on the show.
We just had a small discussion about the origin of the name itself, and you mentioned that Nordigen. First and foremost, you said the domain name was available and affordable. I understand. What are other reasons for calling the company Nordigen?
Yeah, so we started a while ago, and the company is based in Latvia. And Latvia is a small place, and if you're building a company, you know that you'll be maxing out the market in about like 2 months. So we knew that we needed to expand internationally to grow a large business. We also knew that we needed a name that would be internationally recognized as something trustworthy. And what we decided is that we want to associate ourselves with the Nordics, because the Nordics people have done a great job in building a reputation that is totally amazing, and we thought, why not borrow it? And so we looked up different kind of names that had something to do with North, and Nordigen.com was available as a domain. It cost us, I think it was like even like the first year was 50% off, which was, I think we bought it for like $4. And yeah, great domain name. The value for money was amazing. So I can't complain.
Roland, I see here a trend. For the name of the company, you borrowed the identity, or let's say the brand awareness of Nordic businesses and like mentality and standards and ethics and so on. And what you do with your company, we will dive into this later on, of course. And when you do is your solution is basically borrowing your customers' um, data identity. Is that so? Would you agree?
Look, so we're in the business of credit. Credit is all about borrowing something. So you're for the people, it's borrowing money. For the companies, it's borrowing investments from their investors. I think borrowing in itself is probably a great way to build more value. And the fact that we borrowed the name or the association from the Nordics allowed us to build more value. And the magical thing about it is that we're now bringing the value back to the Nordics, and we're putting their Nordics name on the map. And similarly, well, we're kind of operating in an industry that's also kind of it's co-dependent on each other in a good way. We're leveraging new regulation, and we're borrowing the good things from the regulation and making investments further into the ecosystem. So yeah, I would probably say that yes, it's a lot about borrowing, but credit is all about borrowing, and finance is a lot about borrowing from each other and trusting each other. So it's I think we're nicely fit into that ecosystem.
Yeah, and just the capital borrowing side is important and one of the key elements, of course, and that's where you are focusing the solution, I understand. But there's also there's the lender that buys the trust created by some other providers of data or analytics from this data. One more general question, if you allow. So you are riding the wave of the open banking, so to say, and your surfing board is becoming more stable and more visible, right, on the sea and oceans open banking kind of data oceans. But for people that are not yet in the know, there's an obvious opposition that springs up in one's mind: open banking versus closed banking. So closed banking. So explain what used to be. I mean, what is closed banking today? What is open banking, and what the benefits of open banking are for customers and the lenders or organizations using open banking approach?
Yeah, great question. So think about your own bank accounts. You have been banking with your bank for several years, and the bank knows everything about you. They know what kind of things you like, where do you mostly love eating out. They know what kind of services you use, what kind of subscriptions you use. So they sit on a lot of information. Closed banking is banks having a monopoly over that information, meaning you have a relationship with the bank, you're building that relationship with making those investments using products of the bank, using their credit card, the mortgage, and it's only the bank that benefits from this. And you, in a way, like people in Europe, they own their data through things like GDPR. Individuals and people are the owners of their data, but closed banking means that the data is stuck in the bank. Basically the only way how previously people were able to migrate the data was like go to their online bank, ask for a bank statement, and take that statement and go, take it somewhere else. And it's like a nightmare of a process that you have to go jump through in order to get the data that you hold in your bank to take that elsewhere. Open banking is a concept that means people should be able to move their data elsewhere, wherever they please. It might mean that, let's say you're banking with one bank and you want to migrate that data to another bank. Maybe you are applying for a mortgage somewhere else, and that new bank is asking you, hey, Alex, can you just pass me your bank statement from the other bank? Well, you should be able to do that without jumping through hoops. Or maybe there's another angle. Now we have lots of fintech apps, and there's like lots of really smart people thinking about, well, how do you improve the financial well-being of people? So you might want to take your transaction history that you've made with that bank, and you might want to take it to an app that tells you how to be just more careful or more smart with your finances. And this is where open banking is about. So open banking in a way is about removing that monopoly status that the banks have had for hundreds of years over their customer data, and opening up the market to new applications that can take the data and offer new services to people, which eventually everyone hopes is going to have more competition and more innovation, and more competition again and more innovation again. So that's
I will translate it into sociological kind of terms. So basically, we used to have loyal relationships with the bank after a marriage, signing papers. And open banking is basically promoting what? Promiscuous relationships on the financial market, for one thing, of course, in some other verticals as well. But promiscuous is good in this case. And it doesn't mean I take all my data, or what I want to say, it doesn't mean that the context is only when I transfer 100% of my data from one bank to another bank. I might be looking for one solution to my financial needs, let's say, and like mortgage. My current bank doesn't give me the best on the market, so I take my data and then hunt for better mortgage solutions in other banks. So I stay in my bank, but for one specific financial need, or look, search of a product on the market, I can take this data to another organization. Banking or insurance or like a real estate owner, if this is a residential for rent, for instance, in KYC situations. So that's true as well, right?
Yeah, I'd love to come back to the comment you said, that it's kind of like, you had marriage and then now you're opening up, like making a more open relationship, basically. This is how banks view it. Obviously they hate open banking, and for like good reason. they bear today in Europe, banks are forced to create open APIs, and they bear all the costs of that and none of the benefits really. So I can't blame them at all. But the way that people view it, well, it's kind of like, like for people on the marriage comparison, it's like arranged marriage. Like there's not a lot of, basically it's the bank that comes to you and says like, hey, this is what you should marry. And for people, they would rather want to marry someone they like, and they want to find the best partner they can find. And the open banking is all about just, if you think about these financial contracts as tiny marriages for like different, purposes, then that, I think that's a lot more better for the individuals. And then like, obviously you can't keep it closed forever. In reality, open banking, in Europe, we've had it officially since 2019, but unofficially open banking has been live since the end of 90s. And there's been lots of ways how open banking has been hacked. As in, there were like solutions that were able to mimic what open banking is today through regulated means, and they had unregulated methods to build it. But it just, I think it's just a symptom of a larger trend that people want more ownership of the data. Technologies are becoming more open rather than more closed, and I think the end game is that, well, you are inevitably going to have open something in all of the industries. Today we're talking about open banking, but we might as well be talking about open insurance, open credit bureaus, and eventually just open data. And Europe loves open data. You look at how many regulators are creating their own open APIs to share tax information, to share information about pensions, and that's happening all across Europe. So I think it's just a symptom of a larger trend, I suppose.
Before actually diving in the solution itself, look, I understand. So the regulators in EU are changing the way banking industry needs to behave and like interact with users. And they're opposing, you said, right, somewhere between the lines, they're opposing strongly. Are you betting against the conservative kind of closed banking era financial institutions, or you see a way to cooperate with them, or this is a way of forced cooperation, kind of?
Yeah, so for banks, well, the regulator has told them, we have 6,000 banks in Europe, and the regulators told them, banks, all of you, create open APIs, and you should bear all the costs, and make sure that they're good. Make sure that they're as good as your best online banking system. That's how they actually have said. So banks have spent ages building amazing online banking interfaces, and now the regulator has said, well, your APIs, they should be as good as your best online banking interfaces. That's a hell of a job to do. And so they have no way out of it. If you're a bank, you should just comply. That's it. That's how it operates. And so they're in a lock-in. If you want to be a bank, well, you better have an open banking interface that developers can plug into, and it should be a really good one. So they're in a kind of a forced relationship. And also there's like this bigger trend that, well, people own their own data. They should be able to have more control over the data. So we have the privacy element as well happening at the same time. So when we're thinking about the market, we're not really betting against one or the other. We're rather looking at where the puck is going and skating towards where it's going, as opposed to where it is right now. I mean, today, open banking is still in the early days. You would rather, you could say that banking is more closed today than open, because more people are still trapped in their banks, in their existing banks, and they can't migrate the data to the extent that they'd love to. There's also not a lot of places to move, your data. So you can move the data to another bank, but there's not enough fintech apps have been built just yet to serve as good alternatives. But I think what we're betting on is, we're betting on the fact that fintech industry is growing rapidly. There's a lot of smart people now thinking about how they can build something exciting on top of open banking data. And then banks have no way out of this, because the regulator has said, look, there's the payment services directive. today we have the Payment Services Directive 2. You can bet that Payment Services Directive 3 is going to be more open, and then Payment Services Directive 15 is going to be even more open. So that is kind of the inevitable path that's now the industry is going, and we're just, we're not trying to get bets against one or the other. We're rather trying to look at where it's going to go and then skating towards that future.
Like the famous Wayne Gretzky's quotation, right?
Exactly, exactly. And I'm borrowing that as well. Great artists copy, amazing artists borrow. So,
and that's another quote from Salvador Dali, I think.
Either Dali or Picasso.
Or Picasso, yes, one of those guys. Okay.
Yeah, I should look that up. I should look my sources that I'm borrowing. Yeah,
it's okay. We are living in post-truth era, so it's okay not to remember your sources. Let's try and dive into the solution itself, and then start our scenario basically by going to round one, the solution. So, Rolands, I suggest we just dive into the solution by checking out your website. So we are on landing page, and there's a pretty loud kind of statement: free banking data and premium insights. Navigate me through these. What does it mean?
Yeah, so Nordigen is the first freemium open banking platform, meaning any third party that's building a new fintech application and needs access to open banking data, well, they can sign up through Nordigen to get access to bank accounts data all through Europe for free. We're the first platform to pull this off, and that is possible because we are a licensed and authorized account information service provider. We have our license active in basically all of Europe, and we can legally connect to free PSD2 open banking APIs developed by banks. They do all the heavy lifting. We just established the connection, and we're able to give access through these aggregated APIs through a single endpoint to all the developers on our platform. The way that we make money is by helping these developers to make sense of banking data. So if you think about banking data, well, banking data is a very noisy data. Think about the last time you went into your own online bank and you looked at the transactions you've consciously made. Some of those transactions you can barely recognize yourself, and these are transactions that you've consciously made. So let alone for developers, when you're building an application and you have hundreds, thousands, hundreds of thousands of users, and you have to make sense of this banking data, well, then you need extra help. And then that's why Nordigen is offering really amazing premium solutions for helping developers to categorize transactions and to enrich them and get good understanding about the customer behaviors or different kind of insights they might need to power the application.
How rich is the account information in details? I mean, this freemium, free tier, right?
Yeah.
What is included into this account information?
Yeah, so we plug into official PSD2 or open banking APIs developed by banks, and that information includes basically 3 fields. We can, with customers' consent, we can pull their name from the bank. We can pull list of IBANs or bank account numbers associated with that name, and we can pull transaction histories. This could be anywhere from 6 months to a couple of years of transaction histories, all with customers' consent. So it's the customer that needs to authorize access to this data, and we explicitly ask them which data they want to share, and they just let us know which data they want to share. Mm-hmm. That's the top level view of what is being accessed. In reality, what's the transaction data is probably the hardest data thing. It's the richest, but also the more complex data piece. Because transaction data is just a list of dates and descriptions and numbers, and it's raw. It's really raw, and it's hard to understand. How people earn and spend money unless you do some hardcore data crunching. And so that's why the access to data, we think it's a, first of all, data access is an absolute commodity in Europe. It's free. Like, banks have provided their APIs, they do all the heavy lifting in terms of costs. All you need is a license and development hours to connect to those banking APIs. But like, where the real value sits is in making sense of the data, and that's how we priced the solution, basically.
Mm-hmm. So your access to data is for free, and then you enrich, categorize, analyze this data, and segregate in specific silos, so to say, all this noisy data. And this is available in a premium package to your clients.
That's correct.
Great. How many clients you have, and who are they, and what are the general, what is the general idea about the current financials, MRR, ARR, whatever you follow?
Yeah. So Nordigen works with fintechs, lenders, and neobanks. That's our core audience. Today we work with more than 50 fintechs, lenders, and neobanks across Europe. Some of our core markets include the Baltics, Nordics, Poland, UK, Spain. But we have now leads pouring in from all over Europe. Wherever there is the open banking revolution happening, that's where we see great builders just kind of coming up with ideas on what they want to build, and they come to us to try and build their first prototype with us. Where we are as a company, like right now, we're doing somewhere around 1 million ARR in euros. So I would rather say that, yeah, we're kind of still in the early days, but it's always open banking, and I think we're just nicely following that trend and nicely riding that wave, and the future looks extremely bright. I think the UK recently posted that the UK regulator has seen 2.5 million Brits connect their accounts through open banking, and that's not a lot of Brits, comparing to what the population is, right? So we're talking about a country of 60+ million people, and only 2.5 million have tried and connected their accounts to some third-party apps. So yeah, I think the future looks extremely bright, and I also, I'm very excited about the level of fintech investment that Europe is seeing right now. We have a couple of crazy great examples of companies that have grown, from tiny companies a few years back to massive companies in the future, and a lot of them already use open banking, and we're betting on the fact that a lot of developers who start out today and they want to build their own solution, they'll be plugging into Nordigen for their first prototype and staying with us until they do the IPO. So that's kind of like the plan.
I'm smiling, you know why? Because it again brings up the Klondike comparison. People are looking for lucky strikes in these deposits of data, and creating apps on top of information about this or that kind of golden deposits. And what you're doing, you're actually selling them spades. And you know who made the most of money in Klondike? Guys that were selling spades rather than looking for gold.
Yeah, I think, there's another quote which I don't know the source of. It's like the history does not repeat itself, but it rhymes. And I think it rhymes nicely also in open banking. Like this wave of open banking has already happened before. In fact, in the year 2000s, that was the first craze of open banking. There were the first big companies of open banking. There was Yodlee, Finicity, Fiserv, MX.com, and all of those guys laid the foundations of what open banking is today. And a lot of what they did back then is still reflected in how developers and thinkers and builders still look at the opportunity. So yeah, the good thing is that a lot of these things already have been figured out, and all we have to do is just study the past and try and understand which of those things are applicable to the future. Not all of them are directly applicable, but it's a proven business model. Whenever someone is digging for gold, you should be looking into what kind of shovels they have, and is there a chance to provide the best shovels.
So you mentioned 1 million euro ARR, I understand, which is great. How do you plan to take to 10x this?
Yeah, well, so what we're basically betting on is that there will be a lot of fintech developers who will need open banking, and I think personally that's a pretty safe bet. There's great insights already in the fact that while European fintech investments are growing through the roof, there's a lot of great people that are currently working in large financial institutions are deciding to quit their day jobs and start startups. And those are like some really expert people, experts in the field that see an opportunity to build something that's, ideally competitive to everything else on the market. And so that is basically our bet. We also, again, so we're borrowing concepts from wherever we can. We saw how Plaid in US grew, and Plaid today is a company that was recently acquired and then unacquired by Visa for 5 billion euros. And what they did amazingly well was they, when everyone else was trying to serve the enterprise tier 7 years ago, Plaid was a platform that was just amazingly well positioned towards the fintech developers. And then today, what you see on their platform, they have these amazing brand names like Venmo, Lending Club. They have Robinhood, which made the news a couple of months back, and Plaid saw all of that growth. All of that growth of their clients comes back to them because they're so deeply embedded into their products and the user experiences. And so what we're trying to do is just learn from the best, really, and we're replicating whatever they did several years ago in US by being serving the high growth potential startups, high growth potential fintechs, and just making sure that they're super happy and they start with the company and continue to grow alongside with it.
As a side note, in 10 years or so, do you think the closed banking will be a thing of the past?
I don't believe so. I think what is important is that people have a choice, and right now, to date, they had very little choice, really. So if you're starting with a bank when you were 18, you're quite likely to stay with your bank. And is that bank the best bank you could be banking with? Well, certainly not. Absolutely not. Because even though the banks are coming up with amazing features and ways to engage people, well, the tech sector has a way of coming up with solutions that are very focused on solving some very niche problems, but they do really well. Like TransferWise, for example. Like TransferWise is amazing at making transfers abroad. I would never, ever make a transfer from my home bank to UK accounts without TransferWise, because that would be just stupid, and I would lose a lot of money. And then like for what TransferWise is one example. Like Revolut is great at when you need a second card and you need that card to be smart when you go abroad and be able to lock it so you're not being skimmed or whatever. So these are niche functions that's my home bank never going to be able to provide, and frankly I don't really expect them to. And I think that eventually in 10 years time, I think there will still be plenty of closed banking. I still believe that people should have a choice to choose whether or not they want to use third-party apps, and they don't have to if they don't want to. And then I do believe that there'll be a part of population that's going to go into stealth mode and not use any of the third-party apps and just pick a bank that they trust and they want to keep all their data with the bank. Just like there's people in the world that don't use smartphones, and that's fine. But as long as you have a choice, and I think that's the biggest issue today, is that people don't have a choice and they just stuck. But if with open banking, you have choice and there's competition, and that's always good for the economy.
Yep, it's like similar choice you have in books. You read either printed books or on a Kindle or audiobook, right?
Exactly, and then like sometimes you read all of them, right? So I'm consuming audio all the time. but only when I'm on the go. And then you still want a stack of physical books by your bedside, because every now and then you have this inspiration to just sort of dial back and shut off and go offline. And it's, yeah, as long as there's a choice. And I think that's too much choice, of course, can be another extreme, but a little bit of choice is always good.
So it's better to have problems of growth rather than growth of problems.
Exactly.
Look,
this is another
one more
quote that I will take.
And this I have from my student times, so I won't be able to remember myself who was the author. Definitely not me. One last thing in this round. You have not mentioned a buzzword pretty often associated with fintechs and big data and so on, blockchain. Why so? You are not using, you don't plan to, or it's already so integrated you don't even have to mention?
Yeah, we're not using blockchain. We don't have to. I think blockchain is an amazing sort of technology or concept. But yeah, right now there's no way we can apply it into our existing business or any way that we could apply it. Like, those things can be replicated by a database. So I believe that eventually we'll see a lot more connection where open banking has a play with blockchain. But I do believe that quite likely the combination is that we'll see, like, blockchain powered companies use open banking to power more customer experiences. But I don't think that open banking and blockchain will somehow be interlinked in terms of, one making the other better, rather than they'll be just like maybe used as part of the same stack somewhere. But yeah, we're not using we're not using blockchain in any way.
So you have to come up with an open chain or something.
Yeah. If anything, that will definitely will unblock the blockchain. That would be a very Nordigen thing to do.
Yeah. Okay. Rolands, let's have a dive into the second round, competitors, and see how your competitive landscape looks like.
Yeah, absolutely. So, well, Nordigen is up against the incumbents of open banking. Like I mentioned, open banking is more than 20 years old. We're right now in the second wave of open banking. Nordigen is trying to start the third one. And today we're up against the likes of Tink and Plaid and TrueLayer in Europe. Those are companies that are selling access to banking data. Here's a funny thing. Well, banking data is free in Europe. We have a regulation that says that it's freely available to any developer who has a license to access it. And we just think it's fair that free data should be free. And so Nordigen figured out a way to provide free access to data without charging the developers for anything to acquire the raw banking data. We were only able to do this because we offer a really strong suite of premium products on top that allows us to monetize the free users of our free API. And that allows us to kind of just build this new innovative business model. And so in a way, like, the things that Plaid and Tink and TrueLayer have done, they're incredible. Like, really, they put open banking on the map. They put the European fintechs in a position that they now can build these applications, and a lot of amazing applications have already been built. But I think what is missing right now from the current market is that, well, it's just too expensive to connect to banking data. And if you use any of the open banking incumbents, well, you're likely paying a lot of money for something that is actually, should be cheap. And so we're trying to replace that with a solution that's more inclusive towards the early stage companies and towards the builders that want to start with open banking, but also in the long term, it wouldn't cost you an arm and a leg to operate on top of open banking.
Which is an amazing trick, you could say, to basically attract developers to your solution and move from whatever they're working on based on paid access to raw data that you are providing for free. Is this a, you would say, like deal breaker for all the other companies, or can they catch up and also make this for free for their current client base?
Yeah, this is funky. So any incumbent that is currently charging for access to banking data, for them to replicate our model, they would literally have to give away all of the revenue they currently make from the service. So you can't, say that, hey, this is going to be free for all the new clients, but the old ones you should still pay. And then some of the companies that are operating in the market, those incumbents, they make millions, tens of millions from selling access to data. And walking away from that revenue stream and that predictable business is really hard. And frankly, well, not a lot of companies would want to do that, and their clients are not even asking them to do that, because they're mostly dealing with large enterprises, and those enterprises are more than happy to pay a lot of money for solutions that work. And so when we're thinking about the opportunity, we're rather thinking that, well, the builders of today, when they look at the market and they scout for these open banking platforms, they're going to sort those platforms by price. And we want to have the best price, and not just cheap access to data, but free. And that is a really powerful position to be in. Everyone in Europe is plugging into the same banking APIs. Everyone who's a licensed account information provider, well, they're all plugging into the same banks. It's a commodity access point. And in a commodity markets where the products are basically identical, then the best price wins. And then that's how we look at open banking as well.
Yeah, amazing. So where the game ends for them, you just start, right?
In a way, or I think we are expanding the game. Like with us now, suddenly the game is much larger than you thought. You used to think that, well, here's a list of people that can use open banking solutions, and now if you bring the price down to zero, where you open up a lot of more opportunities where this data can be used. And I'll give you a couple of examples. There are industries where they have so many users that could plug into open banking that none of the platforms on the markets, none of the price points would be just kind of good enough, because they have the usage they have would be tremendous. And for them, a free product would open up a opportunity to actually monetize those, or like to onboard all those users onto open banking. But any kind of paid product would be just crazy expensive. And one example is loan brokers. Like loan brokers have lots and lots of users, but they have very slim margins. So that means that they can't afford to spend a lot of money on every single user. They've already spent a lot to acquire the users, and they want the admin costs to be kind of like as small as possible. So for them, if they have hundreds of thousands of users onboarded every month, they need something that is not just cheap, but like frankly, a free solution or something that looks like open source is more kind of available to them. I'm not saying we're open source, but rather the business model is very similar to an open source model in a way that we provide the commodity service for free, but the value-adding service is the one that is kind of actually a premium.
Yeah. So again, there's a comparison between Linux and Windows. Linux is available for free, but if you want to build some like premium features, you do have to hire like consultants and so on.
Exactly.
Great. Rolands, thanks a lot. Let's move on to round three. Here we discuss one or two managerial or founder kind of decisions that you made in the past, and you would have, or you would make a different decision today. What's that and why?
Yeah. So one of the worst ideas we had a while ago was to start with the enterprise segment. So we've been building Nordigen for several years, and our initial hypothesis was that open banking would be first adopted by the large banks and the large enterprises. So we spent ages trying to hunt them down. And I just can't emphasize the pain that a small startup can go through to get a large bank to sign a deal with them. And there have been sort of months where we have been trying to hunt people down and to trying to get them to sign contracts. and to sign off basically on doing POCs, and all the banks right now in Europe, and just basically the large enterprises in Europe, they're so nicely positioned to sort of use the innovations of startups and test them and maybe pick only a few eventually. And so I think we spend too much time trying to work with enterprises, and that basically, if we had dropped the enterprise element and just started with the builders and developers that we know and love, and now though they are the bread and butter of what we do, then we would have moved significantly faster, and we would have probably be kind of significantly further away today. But also I think it's kind of just a natural cycle. Like, you can't build a company. It's very hard to build something that has perfect product market fit on day one. In fact, if you do have product market fit on day one, it's a bit scary. Like, how do you keep the momentum? So I think that's just part of the experience. Like, yeah, we started. We tried to sell into all the largest tier 1 banks at one point. We did projects with like lots of them in Europe. We kind of, like, the big learning is like, hey, this is a segment that is actually very slow moving, but the fast moving segment is the fintech apps and fintech builders that are just starting out, and they're venture backed, so they have high growth potential, and those are great for us, and we're great for them.
Wow. So you were trying to get enterprise, or like the conservative banking kind of part of the equation into your client base, and that was not successful for all the obvious reasons. Of course, it's first enterprise, and second, it's banking enterprise. Of course, I mean, decision-making process is very long, and it's much better for them to say no than to say yes and take some risks and so on and so on. And then I understand when you came to some dead end, you decided to bet against them and focus on the nascent neo banking kind of movement and trends.
Yeah, like the way that we look at it is,
admit it. Come on.
Yeah, so the way that we look at it is that instead of trying to work with the enterprises of today, we're working with the enterprises of tomorrow. And then, of course, the enterprises of tomorrow are kind of built on the ashes of the enterprises of today. So yes, you could say that we are in a way betting against them. But to be honest, like the fintech industry, and this is kind of should not come as a surprise, that the tier 1 banks are everywhere. For every Revolut and number 26, the venture investors behind them have banks as LPs. There's the corporate venture arms of banks are becoming ever more prevalent. So in reality, it is still us working with the big banks, and in one way or the other. So they're not going anywhere. Like the fact that they're for every Klarna and every Revolut and every number 26 is still backed by some really big banks. And the reality is that, well, like this is they use startups, they use the high growth fintechs as ways to innovate, but it's them who are financing a lot of this growth, and they're still they still are reinventing themselves, but they're here to stay anyways.
Yeah. So Nordigen, you could say, enriches the gene pool of the data and like financing or banking industry, and then who knows, maybe it'll spark some new fit and dynamic animal that would kill the dinosaurs, or make them aware that they have to change quicker.
Like the dinosaurs are not going anywhere. It's just that the dinosaurs will eventually form communities with the new incumbents, because the new incumbents, like you don't want in reality, the fintechs are reliant on the banks. Like everyone has a bank account, and you want to have a bank account with someone who's trustworthy. So everyone is still banking with the old system, and yes, you're able to acquire users much faster than the old incumbents. Yes, you're able to offer some solutions that the old incumbents haven't just even thought about, and you're solving a niche problem and do that very efficiently, like TransferWise. TransferWise could not be created in a bank. It took a few crazy Estonians sent far away from their home to figure out how to pull this off. But like in reality, it's still like we're still interconnected. So there's every single bank killer is still backed by a bank, and it is actually they're killing the banks with banks permission. So and I think it's there's no illusion. We're not the banking system is really tight knit, and so it's quite often that you see the disruptors actually being the disruptee themselves.
Disruptee. I know there's a new type of dinosaurs. There's this Velociraptor, and then velo meaning quick in Latin, right?
Yeah.
So Nordigen is one of those velo disruptors in the banking industry. Great. Let's move on. Rolands, let's move on to round 4, the company. So the company was founded, I understand, in 2016. You are a team of 2 co-founders, schoolmates.
That's correct.
Mates, and all the other stuff that you mentioned already a couple of times in other videos. Rolands Mesters, the CEO and co-founder, and Robert Bernans, CPO co-founder, right? CPO meaning Chief Product Officer.
That's correct.
Yeah, okay. So you know each other for quite a while, I understand. What's the labor division in the founding team? And by the way, are you just 2 founders, or is there anybody else on the board from your investors and stuff?
Yeah, so it's 2 co-founders. Our board consists of founders and investors. So it's a very simple split. The way that we divide things internally between myself and with Robert is I'm responsible for all things external communication, and he's responsible for all things internal communication. Okay. So he's the one who is thinking about where the product has to go, where the product, how we build products, how we operate, how we ensure that we deliver whatever is promised. And I'm the one who's literally talking with everyone as much as I can. I'm talking with users, talking with investors, talking with partners, talking with all of the stakeholders, and I'm bringing that knowledge into the company. I mean, like the line between the sort of duties is kind of, as with founders, it's a bit blurry. This Robert is also very much engaged with customers, and if you apply to our product, there's a good chance that Robert will handle your application still. So that's pretty cool. You still have the founder you can talk to understand how the product works and how to do the integration. But yeah, if you have to just say, like, I would rather be the kind of the interface of the whole operation, and Roberts would be the really smart backend.
Whose idea was it to found the company?
So it's hard to say. Like, there was we actually started, me and Robert started working together in 2014, and we wanted we both had day jobs. I had started a graphic design agency of my own, like as my first business. It was doing pretty well, but I always wanted to build a SaaS product. And Robert was working in a credit institution running a risk team, and so we were just meeting up on Wednesdays in a pub. To the extent that there was one instance where when we came in and the lady in the pub just gave us the beers because she knew that we were regulars, which was I never had that experience ever. Like, really fun. But what we knew that we wanted to build something, and we spent a year trying to build a platform for airline tickets, which was luckily we didn't do too well back then because we otherwise, last year would have been very critical. But we yeah, so one thing led to the other, and we started playing around with just technologies and concepts and ideas. And it was Robert's idea to look into analytics and credit analytics in particular. And then we were just like, back and forth with ideas until we ended up in open banking. And frankly, back in 2015, 2016, open banking wasn't a thing, and no one really called it open banking. There were lots of other things to call it. There's the account aggregation or access to data or access to accounts. There was a concept developed in Germany in 1995 that's literally called access to accounts, and there was but open banking wasn't a thing, and so when we started out, we started kind of just through banking data analytics as a concept, which had nothing to do with open banking, and then just gradually. The moment that Plaid started to raise these super rounds, Tink started to get lots of traction. That's when open banking was kind of formed into what it is today. So I think we just, it was, I would probably say that it was Robert's idea to do all of this. But I think we're just fueling each other. It's kind of like someone, we both bring these buckets of gas and matches, and they're just throwing gas and matches at each other until something sticks.
Roland, what about the company as such? How many people you are, and are you hiring now? What positions?
Yeah, we're 25 people at the moment. The team is based in Riga. About 70% of the team is engineering, data science, and we're definitely hiring. So we're hiring on all fronts. One of the big things we want to hire this year is a proper growth team. We have, I would say, in a way, we have pivoted from a kind of sales model to a more freemium inbound approach, where we are right now thinking about how do we get closer to developer communities, because they're they're scattered all over the place. There's people who are reading Hacker News, then there's people who are reading Reddit, then there's people who are sitting in banks and not reading the sort of the international media, but rather local things. And so I think we want to find, right now we're trying to form a growth team that consists of marketing and a different kind of inbound funnel optimization people to kind of get closer to those communities. At some point we'll quite likely start a Slack channel for the community, which is very popular these days for every kind of community-based company. We haven't done that yet, but one of the things on our radar is to figure out how do we kind of build a community of developers and builders, and then that is going to require a team.
You are aware that you can not only focus on people that are building already something, but also all those guys or founders or potential founders, I mean, guys, girls, who are not yet building a product, and that you could instigate them to start a company based on your products, right? Would you approach this as well?
Mm-hmm. The way that I think about open banking in general is that open banking is only as valuable as the applications you build on top. So Google Maps, for example, was a great platform, but Uber was one of the best ways how Google Maps was used. And Uber has nothing to do with the mapping service, but it has everything to do with the customer experience that has the maps and geolocations deeply embedded into the service. And similarly today, for every Klarna of Europe, every buy now, pay later product requires open banking very deeply connected into the whole customer experience. That I think is a bigger influencer for the young up and coming entrepreneurs. The fact that you can build the next Klarna, and I don't think it's going to be Nordigen. And in fact, I would hate for Nordigen to be the kind of the front face of open banking, because we're not the most exciting thing you can build. The most exciting thing you can build is the next Revolut, the next PKO, the next ING, the next Barclays, then the companies that are disruptors in their own rights and grow to be really powerful. And I think Klarna is doing a great job in that. I think all the new neobanks in Europe are doing a great job TransferWise as well. And so those, I think, are going to be the concepts and the companies that inspire the new people. And we'll happily be working in the background, operating the plumbing and the infrastructure. That's I think is more interesting. Like kind of like AWS. Like AWS is great as a concept. Yes, super profitable. But in reality, like they're not the means to an end. AWS only exists because people need cloud processing to do things digitally, and all the business today is mostly digital. Like really, there's not a lot of things happening on the street, and so people need digital experiences. And I think that's kind of that's where the front-facing apps, consumer-facing apps, business-facing apps, those are the ones who are going to actually be the inspirators.
Rolands, thanks. Great. Let's move on to final round 5, Formula F3, we call this, funding for the future. The funding by now, I understand, was pretty modest by the fintech standards, around 1.5 million euros, I guess, from a couple of VCs as Inventure, Seedcamp, Change Ventures. Anybody else?
Yeah, we have a couple of great angel investors who joined in. We have ID4, which is a French fund. But like you say, we've been very scrappy. We've been operating in cockroach mode, as we internally call it. We've been building a product. We knew that building a product of this quality is going to take time, and we just wanted to kind of not take too much capital, but rather to try and do as much as we can with the revenue and with and by just being sort of very careful with the funding.
Cockroaches are known to be able to survive even a third world war, and nuclear kind of apocalypse, right? And I understand this mode also helps you to survive this 2020 kind of apocalypse, right?
Oh yeah, absolutely. We're so glad we didn't have like a Series A of 10-15 million done in 2020 or before that, because it would be a nightmare scenario. Like stuff just happened that no one knew was possible. One of the things we saw, for example, was that we have a lot of lending clients that do lending. They are consumer loans, they're credit card companies. Lending in April last year basically stopped. There was a moment, there were weeks when no one knew if there's gonna, if banking is gonna be a thing. Like really, today it seems kind of like obviously, far-fetched, but in April, we were having calls with our clients last year who said that they've no idea if the company is gonna continue operating, and that is just a crazy thing to think about, right? So access to finance is one of the most important things, to fuel growth, and it's a really embedded part of the of economy, and there were moments when people just literally didn't know what's going to happen, and the fact that we were operating in a cockroach mode and have always been operating in that mode, like we jokingly said that last year wasn't that different than all the other years. Like last year was all about looking at where the market is going and trying to figure out where we want to go, assuming our hypotheses are correct. And that's the way that we started in 2014 with my co-founder. And that's something that we also had in 2016 when we established the company, and 2018 when we raised our seed round. So it wasn't, that different in terms of, the challenges that we had to jump through. Of course, it was crazy weird, and it was hard for a lot of people. And it was, fact that you can't meet your team and everyone's operating remotely, and there's really no work-life balance because we're all working from our bedrooms. That's kind of been, the weird part. But yeah, the fact that we've been scrappy and just very careful, I would say, is that allowed us to not just survive, but actually come up with a freemium model and change the game. Even though there's a lot more, the industry is filled with great and smart people that have a lot of funding behind them.
Yeah. Okay. What's next on your financing map?
Yeah, so we have just launched a really cool new product where we're trying to do the best we can to execute and build the user base and to prove that a freemium model is the way to go. And this year is all about conversions. So we're getting the users in, we're building out relationships, we're helping them to grow, and we just hope to grow alongside with them. So as a company, we're clearly pre-Series A. So the next thing to do is to have a Series A, which we plan to have next year. But we're also not rushing into it. I think this is all about execution and building an amazing product. And so we don't think that raising a round is the means to an end. We think that getting to a business that's kind of growing, but also where to spend the money, that I think is the most important thing. And frankly, that I think is also, this mentality also helped us to survive moments of uncertainty. Like the fact that you haven't raised too much money is good. It means that there's less pressure to spend it all, and I think that means that you can just take careful steps and calculated steps to grow a business.
Combination of cockroach mode of not being overfunded and then being kind of a revenue-driven company rather than VC's money burning kind of approach probably would allow you to be picky about the investors as well. Who are your ideal profiles of the VCs if you decide actually to do this Series A?
Yeah, so we're betting against some really powerful guys. We're betting against the incumbents of open banking. We're betting against the darlings of open banking, if you will, Tink and Plaid and TrueLayer and all these companies that are so well funded by amazing investors. There's a lot of great investors who already backed some of the incumbents of open banking. And then we're for our Series A, we're looking for investors that are willing to challenge their friends in their kind of friendly VCs who are literally betting on the fact that open banking should be paid, and we're betting on the fact that open banking should be free. And I think that's kind of this takes a certain kind of investor. It takes someone who's like very, very bold, who understands how infrastructure works. They understand what is the potential of open banking, not just in terms of, hey, look, there's lots of companies who raised a lot of money and clearly this must be hot, but rather than, hey, what does it mean for experiences in finance in general? What can you build? Or how do you, knowing that you don't know what to build, how do you approach the uncertainty with a business model that is inclusive rather than exclusive? So I think that's the kind of investor we're looking for.
You could even say that this is a case for impact investor in a way.
Yeah, might be. I think finance is very impactful, and there's a lot of investors that are driven by strong theses about financial inclusion. It could be an impact investor, yes, it'd be great.
And they don't care about the conservative industries and so on. What they care basically is just to make the positive impact, kind of masking kind of approach,
Yeah, I think I think there's to be really honest, I think the world is facing a lot of crises at the moment. There's a lot of impact investment that needs to be done in places like health and mental health and climate. So I'd rather say that our investors are probably more financial return driven rather than impact driven. I would hope that there's a lot more impact investors who are now looking into helping us solve and get over this health crisis and perhaps the economical crisis that's going to come afterwards. So I probably would say that the impact, financial inclusion is a very important thing, but we have big things that need to be solved. And I hope that all the impact investors are jumping on those opportunities rather than trying to solve the financial inclusion, which is a problem, of course. But that problem can be solved through traditional investors and diligent founders and visionary founders who know what they can build and make the world a better place through like just technologically advanced financial solutions.
Yeah, Roland, I know this it's pretty early for the company, but what's your exit plan?
Yeah. Well, I think there's three ways how you can exit that company, right? So you can be acquired by a strategic partner. You can be you can sell to a private equity fund, or you can do an IPO. Well, when we look at all these options, we think, yeah, all those three options seem reasonable. Which is there a preference for us? Well, not really. Like, what we know internally is that we have hit something interesting. We were digging through kind of dunes and dunes of sand, and suddenly we've hit an element, an object that we're like, okay, wait a minute, what is this? And the fact that we can pull off free open banking in an environment where there's lots of well-funded companies who haven't been able to do that is very exciting. And personally, I'm just curious to see how big can this get. And so, if that is the plan, then, that probably means we're going to go to do an IPO eventually. But also IPOs, look at the IPOs today. A lot of companies remain private for a lot longer. You're more likely to sell to a private equity fund than to an IPO. I don't know though what the statistics are, but I just, my personal gut feeling is that with where the market is going, especially in Europe, there's not a lot of IPOs. And I think that's what we're trying to do is to build something that's truly big and try to optimize on that. But there's also, there's probably, we'll see a lot of opportunities on the way to maybe kind of join forces with some other companies, if that makes sense, of course.
Rolands, thanks. That was a great conversation. We'll be following your successes, and all the best.
Yeah, thanks a lot, Alex. My pleasure.